Okay, we are past the 9:30 open on the Nasdaq. It's a Thursday, it's March 20th, and honestly the price action is not the best. We have been stuck into this consolidation over the past 3 days now. We're just gyrating around this daily fair value gap, which really doesn't give me any daily bias whatsoever. This is how the daily chart looks like. We have yet to see if this daily fair value gap will support prices higher or if it will fail again. So yeah, no real bias for today. The reason why I did not consider this unicorn right here is because we didn't really have a 1 hour point of interest here on the right side to base our entry on, right? So you can just see that price swept the yesterday's PM session low, but we don't really have a swing low or a fair value gap. Sure, you could take this fair value gap right here, but it's not really very convincing to me. So this would feel like a pattern trade, and that's why I let it go. And also because there is no clear direction on the 1 hour chart, right? We're not really bullish on the 1 hour. Another reason is because even if we did set our limit orders like this, price made 2R already before tagging us in, so this trade is gone. Same for the S&P 500. Price is just consolidating on the 1 hour. No clear direction whatsoever, which means that it's a day where we will just sit it out, wait, be patient, and protect our capital. I was tape reading this unicorn entry on the Dow, and as you can see, it's good that we tape read it because this would have been a loss. It would have just tagged us in and go right to our stop loss. And the reason why I was not convinced in this trade is because we had a big bullish 1 hour fair value gap below, right, which did push price higher. Technically in this trade, the 1 hour point of interest was this bearish fair value gap, right, on the hourly, and we had a swing high, a swing low, and then a higher high, and then a lower low right here. So yes, this was a unicorn technically, but remember, we always need to keep in mind the higher time frame narrative. We need to have a clear bias on the 1 hour in order to consider trading, right? Otherwise, we're just trading patterns, and that's not what we do here. We're trading ICT. I think this is a great example of protecting your capital, because I remember that a few months back I would have taken this trade and it would have been a loss. But now, a year in, I think the chart time and the experience and the backtesting is kicking in a bit, and I do have some experience now, and I can kind of tell when the market conditions are not the best, as you can see in this example. And that's okay. Day trading is not everyday trading, because if you think about it, price is consolidating most of the time, which means that we are just waiting around and being patient most of the time. Gold seemed pretty bullish on the 1 hour. However, I do not like that the low that made the highest high on gold was actually broken. So this is technically a 1 hour market structure shift. Therefore, I would not be considering any longs on gold until we see some kind of 1 hour change in the state of delivery, any kind of bullish momentum that will give me conviction for longs. But I'm also not really bearish, because gold has been going higher and higher over the past few weeks, so I'm not really bearish. I'm 50-50 on gold, my bias is neutral, and there is really no clear direction for gold either. I think I will wait 20 more minutes to see what's going to happen, but I do not have high hopes for today. I think that days like these are very important. I think they're an excellent training for patience and to really, I think they really show you if your psychology has improved, because a few months back I would have definitely forced some trades here. I would have gotten some FOMO out of this spike up, and now I can tell that my psychology has improved because I have zero FOMO from this move, and I'm able to ignore any move, no matter how impulsive or clean it seems, if it doesn't fit my strategy. At this point in my day trading career, I have no problem just waiting for a setup to form and not doing anything. Your psychology has to change when trading, that in any other job, waiting around is considered not being productive, but in day trading, waiting and doing nothing is part of the job. In reality, it's mostly waiting around and doing nothing. If you're just beginning and if you're just starting out, if you did not trade today and if you did not take a loss, that's a win in itself. And you should definitely journal it, you should put it down, and you should give yourself a pat on the back for not losing money in low probability conditions. Okay, it's almost 10:30 now. We can see that price decided to just skyrocket all the way up to London highs and Asian highs, disrespecting both the daily fair value gap and these two huge bearish fair value gaps on the 1 hour. This was a completely unpredictable move, and whoever tried to short here unfortunately took a loss. This is what I'm talking about when I'm saying that you always need to check the daily bias and see the 1 hour time frame structure, because if the 1 hour isn't giving you any clear signals on where it wants to go, that just means that you're not trading that day. Okay guys, I think I'll just go on with my day. We showed up on the charts, we were patient, we didn't take any losses, and yeah, that's a win in itself. So thank you guys for watching. If you like this video, please like and subscribe, and make sure to leave a comment if you have any questions, and I will see you next time.